Hello, everyone. I am Theresa Bartelle with Bartelle's Financial Coaching, and I am a certified financial coach. And today we are going to be discussing entrepreneurs, how we can help you invest your money, save your money, and how you can also balance your personal finances with your business finances. Because I want to help you holistically, I brought in two of my peers who are experts in their area because I don't have the skills, but they do. So, Morgan, can you introduce yourself?
Yeah, hi. Thank you so much for being here. I appreciate all of you who have committed time to this because it is so important as business owners that we look out for ourselves, look out for our final financial betterment, and do everything we can to start setting up our financial fortress for the future. So just by being here, you're getting yourself a step ahead of most other business owners. As Theresa said, my name is Morgan Anderson. I am an enrolled agent licensed by the IRS as a tax expert, and I am an NTPI Institute fellow, which just basically means I'm a tax nerd. I've spent the last 25 years in this industry, and I look forward to sharing some great tips and tricks with you all.
Okay. And you, Tara?
Well, same, Morgan. Theresa, thank you so much for inviting me to participate in this very important event. My name is Terry Nicholas. I am the owner and founder of the Wealth Coach for Women, located in Massachusetts. Most of the work that I do these days is virtual, so as long as you are in the US, then you are somebody that I could work with. I am a certified financial planner, certified success coach, and a certified money coach. And what I've done is cobbled all of my background together to create a process that I call wealth coaching. And wealth coaching is something that looks at you holistically. So I call it more than money. Life is a lot more than money. Although money cannot buy you happiness, we all know that poverty will buy you nothing. So the process that I help people with is understanding what their ideal life looks like. And then using my financial background, I give them that firm knowledge of what that lifestyle would cost them so that they can be properly prepared.
Beautiful, beautiful. So now, without further ado, we're not going to take up all of your time because we want you to gain knowledge from the information that we're going to provide. And we also know statistically our brains can only hold so much. So we're going to get started. I'm going to start with my PowerPoints. And at the end of the video, I will also be sending you an email and I will be including Theresa, she goes by Terry, and Morgan on this email so that if you want to contact them or if you want to contact me, all of our information will be within that email. So now we will get started with our webinar. Okay, so we've already introduced ourselves. And again, our course is Money Management for Entrepreneurs, Balancing Business and Personal Finances. And again, we thank you so much for joining us. So the benefits that you would get from this course, we're going to attempt to give you some financial clarity. We're going to give you some strategies. You're going to gain confidence and control. We're going to give you some call to action things that you can put into place at least within the next 30 days. Ms. Terry is going to discuss long-term wealth building with you, and we will be here to provide you with ongoing support. So solutions and business practices when you're juggling your business and personal finances. It's very important that you separate your business and your personal accounts. You need to pay yourself a salary, which some of us call this an owner's draw. Consistency is the key. You also need to set financial goals for both your business and personal life. You need to hire a professional if you have a business. You need a bookkeeper or an accountant. You might need a financial coach. And what I can personally tell you is Morgan is here. She is an IRS expert. I highly recommend that you have an accountant, someone that can help you manage your taxes well so that you don't have to go see her. But if you do have to go see her, you need to have everything in order so that she can work to help you. You need to create a system. You need budgeting tools. You need accounting softwares, and you need SOPs. And an SOP is a standard operating procedure. In this instance, you may want to sit down once a month and go over your invoices. You want to look at the things that you have going out. You might want to create financial tasks that you need to do for yourself. And then Morgan, if you can talk a little bit on how important it is to separate their business and personal accounts.
Oh, do we have like the next week to talk about this? So part of the problem as business owners and entrepreneurs is we come up with this great business idea, right?
Mhm.
And you have to start crawling before you can start walking, before you can start
Mhm.
running. And it's very easy to fall into the, well, I'm just going to use one bank account for everything and I'll just keep really good records. Well, the
Mhm.
bigger you get, the busier you get, the harder it is to put that line in the sand, right? And
Yes.
then inevitably you sit down with your CPA or your enrolled agent, your accountant, when it comes time to file your first tax return as a business owner. And they say, okay, well, where are your records? And you say, well, here's my bank statements. Okay, well, what was personal? What was business? I don't know. Was this Home Depot charge on March 21st, personal or business? I guess business. And then they say, okay, well, where's your receipt? It's so much easier no matter what you do, no matter where you are in the process. If you're just starting, if you have been in existence for a year, if you've been in existence for 3 years, make the commitment today to separate those two because it's going to make your record keeping. And then, God forbid, if you get an audit, it's going to make all of your ability to submit the records to support you what is business income, business expense, and then what is flow through taxable income to you. And that's the big key. So keeping things separate between business and personal is going to be that door that opens that allows everything to be so much easier moving forward. Like I said, I can talk about this for a week if you'd like, but I'll turn it back over to you, Theresa.
Okay, thank you. And then Terry, she is a certified financial planner. So Terry, can you talk to them a little bit about our third bullet, that they need to set financial goals for both their business and personal life? Can you stress to them how important this is?
Sure, Teresa, thank you for that question. I think goals are important in all areas of your life, not just financial. And one of the things that I think trips people up a lot when it comes to goals is that they might be good at setting a goal, but they're
Mm-hmm.
not so good at achieving the goal. And there's a reason for that, because there really is almost a magic formula to achieving the goal. And it goes way beyond, and it really has to do with how you set it. So what I educate people to do is to basically like draw a line in the sand, or it might be a little easier if you took out a yellow pad, drew a line down the middle, said, what are my
Mm-hmm.
business goals? What are my personal goals? So just to keep it really simple, let's say you had a business goal of earning $10,000 a month. And you just write down, I'm going to earn $10,000 a month. Well, that's great, but what you need to understand is, are you looking at gross income or are you looking at what you're going to pay yourself? Because chances are they're two different numbers. Most of us in business can't take all of what we receive from sales or services or whatever and assume that's our income because we have expenses in the business. So having that clear understanding of what is your net profit that you could pay yourself is basically your first step. So if that was your goal, $10,000, and you figured it all out, and you said, no, I want to pay myself $10,000 a month. Well, that becomes your business goal, that you want to net $10,000 in order to pay yourself. And then on the personal side, you have a personal income goal of $10,000 a month. Now, here again, here's the rub. That 10,000 is your gross income. You have taxes to withhold from that. And one of the things that I see people trip themselves up on, especially when they're new in business, and I'm sure, Morgan, you can back me up on this, is they forget about Uncle Sam. But guess what? Uncle
Oh,
Sam never forgets about you. So
never.
never. No matter how far you run and how strong you
Mm-hmm.
hide, Uncle Sam will come after you. So it's important
Yeah.
to have a good system for either sending in quarterly estimates, or what I recommend to people, even if they're a new business, we want a plan to succeed. Our plan is to be successful. Our plan is not to just scrape by. So I
Right.
recommend that they incorporate. There's a number of reasons for that. And I recommend that you become a subchapter S as opposed to just an LLC, so that you can put yourself on a payroll system. And there are some very easy payroll systems. I happen to use one. It costs maybe 35 bucks a month. It's very inexpensive. But the reason I do that is because I want somebody else to take care of the withholding for me. I don't want to worry about it. I've got enough to worry about running a business. So having that set up has been a godsend. Not only is it a benefit from that perspective, but it's also a benefit from if you ever wanted to borrow money, if you needed to take out a mortgage. When you have W-2 income, which is what you would be creating for yourself, as opposed to 1099 or self-employed income, you look a lot more credible to a banker. So
Okay.
there's that extra benefit of doing that, even though there's a little bit of an expense involved. You basically in life, you get what you pay for. So having those goals, understanding what it is that you need to generate for income, and then where is that income coming from, and understanding the difference between gross income for the business and your own gross income, and that you have to set money aside for taxes. Having that clarity, if you don't understand that or you get confused about that, it's probably one of the most important things to spend money on, is to get that information.
Wow. That was good. That even turned on a light bulb for me. So I'm gonna ask you and Morgan to help me elaborate on how important it is on my first bullet, how important it is from a financial planner's perspective and from an EA's perspective, how important it is that we as business owners separate our business and personal accounts.
Oh, it's essential. There's no question. You never ever want to muddy the waters by only using one bank account. You're setting yourself up for failure. If you don't think enough about your business, think of your business as though it's a separate person. That's how I look at mine. It's almost like raising a child.
Mm-hmm.
And if you don't think enough about that business to give it its own autonomy as a bank account, then you're basically saying to yourself, this is a hobby. And if that is the message you're giving yourself, that is a mindset problem. That is the mindset that you are setting, and you're basically telling yourself, I'm going to fail.
Wow. And Morgan, since you've looked at
Exactly.
all these taxes, can you explain and stress to them how important it is to have a separate business and personal account?
So the IRS has have coined a phrase for this. They call it commingling within the service. And it means that there's no separation between you individually and your business when it comes to the finances. And think about this, Terry, you brought up a great recommendation of incorporating your business. But if you keep commingling the financial assets, it tears the separation, the distinction between you personally and the business. It tears it down and leaves you exposed for anything that happens in the corporate name, even if you are incorporated.
Right?
So you want to make sure that you think about this as a non-negotiable 10-foot tall concrete wall financially between you personally and your business.
Mm-hmm. Absolutely.
Okay.
Like a Chinese wall. That's what I like to
Yes.
call it, is there's no question. And setting up a business account is so easy. There's absolutely no reason not to do it. Many banks don't even charge for it. I mean, I happen to have a free checking account.
Mhm.
When you incorporate, you get a tax identification number. You use that tax identification number to open your account. The bank doesn't care if you work out of your house or if you have an outside office. They could care less. And the
Right.
IRS could care less. So don't think, oh, I've got to, go out and rent space and I got to do all these things. Don't get all in your head. This is like 101. If you want to run a business, if you have made a decision that you are going to be an entrepreneur, that's great news.
Mhm.
But once you've made that decision, your next decision is who's going to be my banker for my business. And it doesn't have to be whoever you use for your personal. It can be, doesn't
Mm-hmm.
matter. But you
Mm-hmm.
want to find a free checking account and you want to just go open it up. And, even if you only have $10 or $15 or $50 or whatever, just open up the account. That's like you wouldn't have a business without business cards. You won't have a business without having a separate checking account, period, end of story. No question.
That's so good to know, because when I first started out in my business, I had to learn the hard way. I didn't really know about you had to have your own checking account. So a lot of people, we branch out to go into a business, but then you branch out and you don't have the knowledge that you need to branch out,
Exactly.
and then it causes
Exactly.
you problems down the road.
And that's why, like I said in the beginning, whether you call SCORE or you call a financial planner or whoever you call, even if it
Mhm.
costs you a few $100, it's money well spent to get the answers to those questions so you're not making mistakes and you're not setting up bad habits. It can save you tens of thousands of dollars to get it right the first time.
Wow, right. And so I also want us to touch on the budgeting tools. And so we're not recommending anything. We're just throwing out ideas of different types of software that you can go and check for yourself and make your own decision. So for personally, two great apps for your personal budget is YNAB and also EveryDollar. And so for accounting software, it might be Quicken that you might want to use to manage your business account. But Terry and Morgan, do you have any other software that they might could look at to see if it would be a fit for them?
It depends on what industry you're in. A
Mhm.
Okay.
lot of a lot of contractors such as roofers or plumbers or HVAC, there are CRMs that are specific to their industry that will
Mm-hmm.
allow them to create bids, monitor the
Mm-hmm.
bids as they're allocating expenses to the line items. So if you're in an industry where it's a bit more structured as far as like I was saying, roofers or plumbers or
Mm-hmm.
HVAC, check out those CRM products. They may be a little pricier than having just like QuickBooks, like you had mentioned, but
Mm-hmm.
QuickBooks is universal for just managing the finances of your business. You can run payroll
Mm-hmm.
through it. Um, you can merge it, reconcile it with your bank accounts, with your credit cards, and it makes it kind of easy to itemize everything and keep track of everything that way. But as with anything, it has its own quirks. Some
Mm-hmm.
programs don't like QuickBooks and they don't convert the information 100%. So if you just link up your bank account statement to QuickBooks and say, okay, it's automatically doing it at the end of the year, your accountant's going to say, what is all of this? Because
Right.
it's not itemized properly. QuickBooks just does it the best way QuickBooks has been taught to do it, which
Mm-hmm.
isn't necessarily always right. If you're industry specific, look for your CRM. It may be a little more costly than doing a QuickBooks and then a separate way
Mm-hmm.
of managing your work, but it's going to be beneficial for you. One other general one I've seen is Xero. And Xero is kind of in competition with QuickBooks. QuickBooks has kind of taken over the world. And
Uh-huh.
a lot of people are pushing back on it right now because they keep raising their rates on a very, like, not even annual basis. It's every
Mm-hmm.
3 to 6 months, you're getting a
Mm.
notice that your QuickBooks bill is going up. And I think Xero is one of those up and comers that's going to be a good alternative.
Okay. And did you
No.
have any recommendations, Terry?
Oh, boy, do I. And I second everything that Morgan said. I do not use QuickBooks. I started out using QuickBooks, and I'm telling you, I'm not a CPA, I'm not an accountant, and I feel like it's really designed for somebody at that level At least that was my personal impression.
Uh-huh.
And I used it for like 4 years and I was ready to kill myself. So it drove me crazy. So what I did was I did a lot of research. And when Morgan mentioned CRM, that's a client relationship management tool. And there are
Mm-hmm.
many of those. Right now, I landed on a product that's called 𝐬𝐻O,
Mm,
ZOHO. And it's a suite of tools. You can just get the bookkeeping. It was like $30 a month. Or you can get the whole suite, which has billing and invoicing and a client relationship management. And it also has a social media tool. It's got about 40 different apps in this one
Wow.
program. And it cost about $50 a month, which I thought was very reasonable. I was doing
Mm-hmm.
so many other things that I could get rid of a lot of things and it saved me money. But what I love is it's idiot proof. I can use it without I can. I mean, if I can use it, anybody can use it. But one of the
yeah.
tricks that I discovered was don't set up things on automatic so that you get a feed from your bank account into whatever you're using, whether it's Zoho or whatever, because
Mm-hmm.
sometimes there's overlap or sometimes things go missing. So what I do is once a month, I download my information right from my bank account, takes me 5 minutes, and I just upload it right into Zoho. And that way I can verify that all the line items are there. And I don't get any overlap and I don't have any problems. When I was doing it automatically and it had an auto feed, I had all kinds of headaches. So that's just my personal experience. Other people
Mm-hmm.
might not have that problem. It might have been something, maybe it was my bank, I don't know. But this
Mm-hmm.
was my solution. And the client relationship management tool is very simple. Most of us don't need Salesforce. That's like putting a
Oof.
747 engine inside of
Oof.
a Volkswagen. So
Hmm.
I like simple. I thrive on simple, and I would go to the ends of the earth to find something that's simple. And that's what I did when I looked at Xero, I looked at Gusto, I looked at a number of them, and they're all good. They all have, I've heard good things about all of them. This is the one that I landed on, and if it's anything that interests you and you have questions on it, I'm more than happy to spend a few minutes on the phone explaining it to you.
Wonderful. Thank you. And Morgan and Terry, I think I may have taken one thing for granted. We may have someone watching this who may be thinking about starting their own business. And what I would like to say, if you have not started your own business yet, please make sure you pay attention to your debt to income ratio, because it takes a business 3 to 5 years to work most of the time, is what they're saying. But if you're in
Right.
debt, if you're using credit cards to do everything, you may not be ready. And so I don't want your decision to become an entrepreneur to be detrimental to you. So if you're in a lot of credit card debt, or if you're finding yourself having to use your credit card and you don't have the money to pay the credit card off, it may not be the right time for you to start a business. And so Terry and Morgan, they are more seasoned than I am. They've been in business for themselves longer than I have. And so I just need to ask each one of them to please just discuss just a few nuggets as to why it's not a good idea if you got to get in debt to do every little single thing concerning becoming an entrepreneur.
Well, running a business is stressful enough, right? And
Yes.
if you have mounting debt coming behind it as a result of the efforts that you're putting in, you're just bashing your head from both sides, right? I
Yes.
mean, I think there are points as a company grows, there are definitely times when you lean on lines of credit or even credit cards if you're
Mm-hmm.
able to juggle them.
Mm-hmm.
Um, but never let it get out of hand. I will say we use a Delta American Express because I love the miles.
Mm-hmm.
Absolutely. But as we're
Mm-hmm.
putting stuff on, we're paying it off. So
Mhm.
Right.
it's the benefit of leveraging those resources, which is being smart, but don't let it get away from you.
Great
Right. And
advice,
Terry,
Mo. Yeah, no, that's
yes.
that's perfect. Now, when you start a business, we all have to bootstrap it. Most
Oh,
businesses
yes.
are not free, so that's a given. But before you hang out your shingle, do your research, do your homework, find out what is reasonable for this business to cost you? Now, for example, let's say you're really good at social media and you decide that you want to be like a virtual social media expert.
Mm-hmm.
So maybe you need to upgrade your computer. Maybe you need to get a better internet signal than what you have, or a stronger signal, or a faster download, or whatever. And as far as doing things like getting the business cards, and there's like a lot of stuff that you think you have to do right away, you don't.
Oh, that's
So
true.
eliminate, just do what you absolutely have to do. And what I recommend is get by with what you have until you see if your service has legs. And if it does, once you start bringing in some revenue, save that revenue for those items before you pay yourself. That way you know if you have traction and if this is even worthwhile. So I'll give you an example without naming any names. And I'll use myself as well as a comparison. 8 years ago, I decided to leave. I was in a group practice, and the way that the group operated was, there was nothing wrong with them. They were all very ethical and everything. It's just that their business model was not the type of business model that I wanted to be in long term. So I spoke with the owner and told him my idea, and he supported me. He understood exactly where I was coming from, but he was not in a position at that point to convert his business to what I had in mind, although it was something he was thinking of for the future. So I made the decision to go off on my own and launch my own investment advisory firm. So prior to doing that, I spoke with a few people. I had an idea of what this was going to cost. And I knew like my startup costs were going to be around $10,000, give or take. But I had the money for it. I mean, I had been working in the field. I had a practice. I had a book of business. All it was severing myself from one organization and hanging out my shingle and taking my business with me because it was my book of business. I didn't work for somebody where I had like a non-solicitor or non-compete. So I knew what my revenue was before I opened the door. And even with that, it takes a while to really, get up and running and get everything the way you want it because you're starting systems and it's a lot of work.
Right.
Well, a friend of my son's just told me about a month ago, he called me and said he was planning to start his own RIA, registered investment advisory firm. He does not have a book of business. He's been in basically like an insurance, and this is a completely different world. And he's telling me this, and I said, have you done your homework? Do you know what this is going to cost you? He was already like up to his ears in alligators, so to speak. And it was too late for him to turn back.
Oh,
And had he spoken to me prior to, if he called me and said, this is my idea, what do you think? My advice to him would have been, join another firm. Get your feet wet, build up your business, build up your book of business before you invest all that money.
that would have been some great advice. So yes, we are here to
Yeah.
help you entrepreneurs juggle your finances and your business finances. I hope you heard Terry and I hope you heard Morgan. Make sure you do your homework. Make sure you're ready because if you're not ready, I'm telling you, the sharks will eat you alive and you're
Right.
going to wonder why you got in this situation. So we're giving you points now that do your homework, make sure you're ready because having your own business and plus if you're working full-time during the day, it is a job. So just do your homework and make sure you're ready.
Right,
So
exactly, Teresa. And like with this person, had he listened to me, he'd still be self-employed. That's fine, but he wouldn't have all the overhead. He would have saved
right.
himself that headache. And what happens when you start out with a great deal of overhead is you don't have a business, you have a job. And that's JOB for just over broke.
Oh, you heard it from the financial planner, the now I got me a new acronym, just over broke. Okay, Terry, I'll be using that. So I moved to the next slide. And now we're going to talk to you about transitioning. You're going to need a plan to separate your personal money from your business money. So the first thing you need to do is identify all of your current mixed use accounts. We're talking about if you're using your bank, your credit cards, if you're using it both for your personal and for your business, we need to come up with a plan so that you can transition not to do that. Terry already talked about it. You can choose a bank that's dedicated for a business account if you don't already have one set up. Morgan has also touched on how important it is to separate your money. So right now, if you're listening to us, and if you have one checking account that you're managing your personal and your business, we highly encourage you within the next 30 days to get yourself a dedicated business account. Separate your money. Open a business checking account. If you think you need a credit card, then you can open yourself a credit card. But like Morgan says, how she manages her business, if she does not have the money there, she does not use it. But most businesses need a credit card, especially if you travel, if you have to do bulk orders, then I recommend that you have a credit card. You need to list all of your recurring business expenses that you need to move over to that business account. Stop using your personal funds for business purchases and vice versa. Like my bullet says, don't mix the money, because if you have to go see Morgan, it's not going to be pretty. So separate your money. So you need to set a date to fully do this transition, like within 30 days. So don't tell yourself, I'll do it tomorrow. I'll do it tomorrow. I'm telling you from experience, doing it tomorrow, December 31st will be here and you're going to be scrambling. And we don't want you to file your taxes late. We're here to help you get your money straight. So you need to start documenting all of your business income and your expenses separately. We've already given you some ideas for your budgeting tools for your business, personal. And then you need to schedule a weekly or bi-weekly financial check-in. If you don't, a lot of the transactions, if you don't have a receipt, you're going to lose them down the line. I'm just telling you from personal experience. Don't put it off. You need to know what's going in. You need to know what's coming out. And if you do it weekly or bi-weekly, even if you do it monthly, when tax time comes, you'll have an idea of what you need to take to your accountant. You'll have an idea if you're going to owe money back. So please transition your business money away from your personal money. That is my number one thing that I want you to take from my session of the webinar. Is very important. Get yourself a budgeting app. I recommend you can use pen and paper to do your budget. I highly recommend that you don't, because it's hard to keep track of that. And so Morgan and Terry, I would also like for you each to discuss again, like how important it is that they set up a plan to transition this money. Like, don't put it off. So, because I prefer for them to hear it from the seasoned. So yes, because y'all have been in this business for a while.
Very
So
long time.
just touch on it, Morgan and Terry, like the importance of separating it, giving yourself a timeline. And so we might have someone that's listening and like they don't even know where to start.
Yeah.
To separate their money. Can y'all talk on that?
Oh, I think the bullet points that you listed, Theresa, are spot on. Just
Okay.
follow those as a great guidance. If you're already in existence and you've got everything commingled, follow this checklist. This is perfect. And the reason Theresa keeps saying, or you end up with Morgan, is because my area of specialty within the tax world, and I apologize, I didn't introduce this when we started the webinar. I deal with tax debt. So people who have been audited and the IRS or states have said, oh, you owe us more tax, or we're not allowing these expenses, or you calculated something wrong, or you file a tax return and you don't have the money to pay it. That's why she keeps saying, or you're going to end up with Morgan, which, all of these steps that Theresa outlined in this transition plan are key, because keep in mind, as a business owner, most of you are sole proprietors or single member LLCs, which means that you report all of your business transactions on Schedule C as an extension of your personal income tax return. Okay. So you have your gross income, And then all of your business expenses and what's left over comes to you as taxable income. If you do not have receipts, if you do not keep a mileage log, if you do not keep these records nice, neat, and clean, you're going to end up not being able to write things off as a business expense, which converts to taxable income to you, which means you end up paying more in tax at the end of the year. So this is a great transition plan and checklist, and don't put it off. Take action right away, because the sooner you take action, the better you're going to be prepared for moving forward.
Wonderful. Thank you, Morgan and Terry. Is
Terry?
there anything you want to add to this? Look, our
No.
ladies of wisdom.
That was great, Morgan. You really summed it up beautifully. And I would like to add, Morgan, please confirm if I've got this correct. But if you are a new business and you've put your own personal money in, which is not unusual because we do have to bootstrap in the beginning, be sure you know how much money you have put into the business. Meaning, I'm not talking about money that came from a sale, from whatever it is that you're doing, but money that you took either out of a savings account or a checking account, or money that you borrowed personally to invest into the business, because that number can be your basis. So
Correct.
you have a value to the business, and when you incorporate, they usually ask you how many shares. And those shares, I remember when I did it, they said, how much money have you put in? And I told them, so they just figured $1 a share, and that was how they came up with the number. But knowing your basis of what you put into the business is really important. I can't remember why, to be honest. I know that I was told it's important, so I just did it. But maybe Morgan, if you don't mind, you could explain
Oh,
why it's so
so
important to know your basis.
my specialty is more after we've accrued a tax. So when you get into your asset sheet, your balance sheet for your business, this is where your basis is outlined. It's basically your investment into the company, and it does come into play when you start receiving money. You can tick off against that if you're a sole prop or a single member LLC. You can recoup that money back and not have it be taxable. So it's really important for that initial step. But as you were saying, Terry, with the cost basis of your investment into the company, it's a long-term plan. And really, because my specialty is on the back end of tax debt, I can't speak from firsthand with that.
So that would be something that you need to research, because I'm telling you, Terry has wisdom. She's been in the business. She's branched off on her own. So if this is something that you have questions about, get on Google, do some research. If you have your own accountant, call them and ask them, because if a lot of times what I'm learning, if you don't ask, people are not going to just volunteer and tell you. You're going to have to learn it hard knocks. And we don't want that for you. So if you need an answer to this question that Terry has presented, please contact your CPA. So I would like to say thank you so much for joining me on my session. Again, I am a financial coach, and I will be emailing you my contact information. And so now we're going to turn it over to our financial planner, which is Miss Terry.
Well, thank you very much. Theresa, you've really covered so much of what I wanted to touch on, although there is just one other point that I would like to make. When you start off in a business, and Theresa, you did an awesome job, and Morgan, you as well, the two of you tag teaming together to really emphasize the importance of keeping good records. Because if you're not keeping good records, you're setting yourself up for failure. And part of that comes from either A, you don't know how important this is, so we hope that by now at least you have that information. But if you have that mindset that you are not going to succeed, and now you're doing all of these things that scream, I'm not going to succeed, guess what? You're not going to succeed. So if you really and truly want this business to become something more than a job, we don't want to be just over broke. We want to be successful. We
I
want to
love
have,
that acronym, Terry.
I do too. That's why I
just
use it
do.
all the time. It's great. You have
Yes.
to develop that mindset that you are worthy of success, that whatever skill set you have that you are bringing out to the world is valuable. Now, God forbid your business plan is you're going to go into the business of making leg warmers for kittens, because I'm here to tell you, you will fail. Kittens do not need leg warmers. So whatever service you are offering, do your homework and make sure it's needed. If you ever, I am a Shark Tank junkie. I love that show. And some of the ideas that people come up with, just, I'm like shaking my head. And then you find out that they're like $1 million in debt and they're doing this really wonky thing. Whoever said that was a good idea? But then you have other people and you're like, why didn't I think of it? And these people are killing
Yeah.
it, making all kinds of money. I mean, selling some of the craziest things. And it's amazing. So do your homework, make sure that whatever the skill or item, if it's a service or a product, make sure it is needed, number one. Okay, so you get that into your head, this is needed. Number two, you have to know how to tell the world about it, and you have to know how to do it in a way that is lean and mean. I know we
Mm.
see a lot of information about Facebook ads and Google ads and this and that.
Mhm.
You can really go down a rabbit hole towards poverty by using those tools in the beginning. Your best bet is to just use the free stuff as much as you possibly can. And you'll see, like, if you follow, I just use Shark Tank as an example, but if you follow that, a lot of the people that are the most successful are the ones that pay absolutely nothing to gain a customer. And it's just so brilliant the way that they're doing things. So you do the free stuff as long as you possibly can and find out that you have traction. And when you start generating sales, don't assume all of that money is for yours for the taking. You need to have that separate bank account and you need to give yourself a portion, not the entire thing. At the end of the year, when you settle the score and you're looking at your books and you're seeing that you're profitable, if you want to draw more from that, you can. But if you find that you're always drawing right up to the limit, if you have a slow month or a couple of months or a big expense comes up, you don't have any resources, and then you stop borrowing money, and then you get into a really bad cycle.
Right.
So your most important tool that you can have in your toolbox is your mindset. 80% of success is your mindset, 20% is your skill set. So develop that mindset of positivity that you're in it to win it. You want to be successful, and then follow along with a lot of the tools that Theresa has provided and the checklists and so forth. We've kept this as simple as we can because life's complicated enough. And when you launch a business, you want to keep it really, really simple. The simpler you have it, the more likely you are to be successful.
Thank you, Terry. And so because you are a financial planner, a certified financial planner, can you tell the entrepreneur at what point they could start thinking about investing? How would they know, okay, it's safe for me to start investing my money now?
So do you mean the money that they're paying themselves, Theresa, or you mean excess money from the business?
The money that they're paying themselves, and then do you recommend business owners to invest their business money, or should they stick to just investing their personal money?
I tend to be conservative. So
Okay.
unless you have like a year's worth of money sitting in the bank, I would not recommend putting that into the stock market. I think there again, you're muddying the waters.
Mm-hmm.
That's my personal belief. The money
Okay.
that you earn, now again, remember you have gross income and you have net income. Okay.
Mm-hmm.
So we'll use $10,000 because it's a nice, easy number. And let's say your gross income, you're able to comfortably pay yourself from your business $10,000 a month. Now, in Massachusetts, we have a 5% state tax. So let's just say you're withholding 20% altogether. All right, so 20% of $10,000 is $2,000, right, Morgan?
Correct.
Okay, good. I'm doing this in my head.
You're on it.
So you would have to take that $2,000 if you're not using a payroll service, and you have to set that aside to use for your quarterly payments. That would be a separate account. So I would recommend you take that $2,000 if you're not using a payroll service, and you open up a separate bank account for that money, and then quarterly you're sending it into the government. If you have a payroll service, you don't have to do that. They'll do it for you. All right. So now your net income is $8,000. Okay. If, let's say, your cost of living is $5,000, well, good for you. You have $3,000 a month surplus. That surplus money, you need to build a savings account first for emergencies, and I recommend 6 months worth of savings, if assuming you don't have that yet. Work on that, and then you want to have short term, like if you know you're going to need a new car in a couple of years or something to that effect, you want some savings for that. And you could take some of that if you have enough cash flow and invest it. And if you're going to invest it and you want to use any kind of a business related investment account, like a 401k or a SEP or whatever, you would have the ability to do that. Now, people ask me all the time about using something called a simple 401k or a single 401k. If you are a business owner and you don't have any employees, you can set up a 401k, but there are expenses involved in that. You can save more than what you can in a regular IRA, but you have to weigh out, the cost benefit, because there are a lot of expenses involved in having a 401k. I recommend a SEP IRA. That I think is the most flexible. Next to that would be a simple IRA. These are two types of savings accounts, retirement savings for business owners. And you would speak with your financial planner about which one is most beneficial for you.
Okay. All right. Well, thank you so much. Now, that was some great information. So at least if they are in business for themselves, at least you've given them some ideas and tips on how that they can save for their retirement. Because believe me, if God allows us to live, retirement will come, and you don't want to work until you're 100. So
no, you don't. But it is also, I do like to emphasize that you need to have cash on hand. You need to have a savings account. You need to have an emergency fund. And even in your business, I like to see people have 3 months worth of business expenses in their business account, if at all possible, because emergencies happen. Things go south. I mean, look at what happened during COVID. Businesses that weren't set up with a strong cash position, they went out of business. And we don't want that for you.
Right.
That's right. Thank you so much, Terry. So now we're going to turn it over to our EA, our IRS specialist.
We brought up so many wonderful points through the conversation just naturally. I need to kind of look at my notes of what I wanted to make sure and convey to everybody. One of the first things, Terry, you had brought this up about estimated tax payments. Because we're self-employed, nobody is withholding taxes from our paycheck like W-2 when you're working for somebody else. Now, if you're incorporated, pardon me, you're required to pay yourself at least a reasonable wage, W-2, where you process payroll, you withhold taxes from it, and you get a net check from your business, which is great. But if you're not quite at the point of incorporating your entity, and usually that's around when you start netting a profit of about $60,000 to $70,000, that's when we typically say, okay, go from a sole proprietorship or a single member LLC to an S Corp at that point, because it makes sense. It costs money to run payroll. Your business has to pay taxes on your behalf. What comes out of your paycheck is your income tax and your portion of Social Security and your portion of Medicare, and then state income tax if you have that. what ends up happening is the company has to match your Social Security and your Medicare contribution, and they have to pay unemployment tax to the feds and to the state. So running payroll is more expensive, but it saves you money because then your distributions, unless there's something wonky going on, you save on the self-employment tax of distributions above and beyond the W-2 paycheck you're paying yourself. So that's why it's ideal if you can incorporate to do so, but you don't want to do it too early. So if you're too early and you're a sole proprietor or a single member LLC and you're filing your annual financial activities on Schedule C on your tax return, you have to pay, as Terry said, quarterly estimated tax payments. And the way you figure that out is based on your tax rate from the year prior, or you can actually calculate it throughout the year. We always just usually use the prior year's tax return to figure out the effective tax rate and say, okay, last year we netted from our business 120,000. Our tax due, considering our dependents, our mortgage, anything else we can write off, was 25,000. So let's just say you have an effective tax rate of 25% to the federal government. Then what you do is for the next year, you make tax payments based on that effective tax rate. What a lot of people don't tell you is, yes, we all know we have estimated tax payments due quarterly or semi-quarterly, April 15th, June 15th, October 15th, and January 15th. But what they don't, or pardon me, September 15th and January 15th. But what they don't tell you is you can pay tax as often as you want. You don't
Oh,
have to save that money up to be made on those quarterly due dates. So what I always help clients do is figure out, okay, what is your tax rate? And every month, pull out your P&L for that month and see what you profited and make a tax payment by the 15th of the month following. So we're in April right now, right? You would make a payment by May 15th for your financial activities in April.
mhm.
And by doing that and making a monthly deposit, you're staying ahead of the game. You're not
Okay.
accidentally spending money that needs to be applied to the IRS or even to the state. You're getting it paid as the year goes. I always tell my clients to think of it as another car payment, right?
Oh, yes.
Without fail, just make that payment because at the end of
Mhm.
the year, if you're making payments throughout the year, you're like, I filed my tax return and I may even get a little bit back. I may
Yeah.
only owe another 1,000. Whew,
Mm-hmm.
dodged a bullet because
Mm-hmm.
I've been working with clients and they're like, "Oh yeah, I'm good, I'm good, I'm good." And then they get their tax return from their CPA and they owe $30,000 and they have no
Oh.
way to handle it. And then we've got to do a new negotiation because it defaulted the prior. So just know that you can make tax payments. You can make them every week if that's easier for you. I have a lot of realtors who
Mm-hmm.
we have taught every time you have a closing, first thing you do with your commission check, make your tax payment. Make your tax payment
Wow.
every time you have a sale because it keeps you ahead. The other thing I would say too is now that we're at the height of filing season right now, you can always file an extension on your tax return, but it's not always best to do so. And Terry and Theresa, I'm sure you two have heard filing an extension is just an extension of time to file, but not to pay,
Right,
Mm.
right?
right. Mhm.
I have heard that.
So think about this. You're in business, and when you file in October this year, right? You file an
Mhm.
extension. When you file in October, you figure out, oh my gosh, I owed $60,000 in income tax for 2024. And now where are we? We're in October of 2025. So not only do you have that tax balance owed from the prior year, but then you're behind this entire year as well. So
Mm,
filing an extension is not always a good idea, especially if you have a business that is progressing every year and increasing the sales and doing better and better, because you're going to end up behind when it comes to catching up with those tax obligations, unless you have a very lucrative business. If you do, kudos. But filing an extension isn't always in your best interest. The other point that I wanted to make, we talked about leveraging resources. I
Mhm.
can't tell you how many clients have come to me and said, well, I haven't filed for a few years, but my wife's cousin said she'd take care of my books, and well, I haven't gotten with her. And then she gave me some books, but they don't really make sense when I look at my bank statements. Know and acknowledge your shortcomings, acknowledge that you're very good at what you do. Whether it's working on cars, running a restaurant, running a daycare, whatever it is, you are very good at what you do, but you don't have to be an expert at everything. You just have to acknowledge that you're not an expert at everything, and
Mhm.
be good with that, and pull in resources to make up for it.
right.
Theresa and Terry, you both have brought up bookkeepers. Oh my goodness. A good bookkeeper is worth their weight in gold. It's not
Oh,
going to
yes.
Absolutely.
cost you a
Yes.
lot of money,
Right.
but hire a good bookkeeper who's going to stay on top of everything. Every month, you should meet with them like, okay, where am I? They will
Mhm.
have reports to give you. They'll tell you the
Wow.
financial tale of your business, your progress. Where are you in relation to your goals? Should you adjust your goals for the rest of the year because you're doing better than you thought you would be? I mean, these people are going to be able to apply all of their education and all of their experience to help you in your business. It's like getting a magic gold key, right?
Yeah, it
Yeah.
is.
Same thing with your tax return preparer. I cannot tell you how many clients I have who come to me and, well, I used TurboTax and I did it myself. And I look at the tax return, I'm like, I'm not a tax return expert. I deal with tax after you've filed and you have a problem. I deal
Mhm.
with audits, and this is where I've seen a lot of these.
Oh,
I'll look at a tax return, I'm like, okay, you grossed 100,000, but you paid 40,000 in travel and meals? Do you have receipts for all that? What about this
oh,
mileage that you claimed where you drove a total with your personal vehicle of 40,000 miles in a year, right? Okay, maybe if you're a traveling salesman, but 38,000 of it were for business? That
oh,
doesn't make sense. And I see
trouble.
this all the time. Having a good tax return preparer who you
Mhm.
establish a relationship with, and you meet with them quarterly, at least quarterly, they're going to be able to, again, apply all of their knowledge and experience to better you, to help you identify where you're heading, the progress you've made, where you want to go. They're going to help you set goals, and they're going to help kind of hold your feet to the fire of staying on top of what you're trying to achieve with your business. Same with your certified financial planner, I would imagine, Terry. You want somebody who has years of experience, and they're going to apply it all to help you. So don't shortchange yourself with that.
No, Morgan,
Oh,
you hit the nail on the head. And one thing in speaking about bookkeeping that I would like to recommend, if for whatever reason you don't want to hire a bookkeeper, God bless you. But if you don't want to hire one, at the very minimum, hire a bookkeeper to set up whatever tool you're using, whether it's QuickBooks or Zoho or Gusto or whatever. At the very minimum, pay them for a couple of hours of their time to get all of your chart of accounts set up properly.
Hmm.
That will save you. I mean, if you decide you want to do it yourself, maybe you're halfway decent at it. At least at a minimum, have them do that for you. And then if you feel like you can run with it after that, great. But really, as Morgan said, building out your financial team can not only shorten your learning curve, but it's going to allow you, it's like putting time back on the clock. Because instead
Right.
of you doing these things, now you have you're delegating. And that's what a professional does. There are certain things you have to delegate. Now, I don't know what other, the people that are on the call, I don't know what their professions are, but I'm going to just guess, okay? I'm just going to make up a little story. Let's say you are somebody who you're super organized and you can go into someone's home and you're a decluttering expert. And there are people, maybe there's somebody on the call today that is a decluttering expert, okay? So they can come into a room, an office, a home, and they can do something in 30 minutes that would take someone who does not have that skill set hours if they even try to tackle it at all. And if they don't try to tackle it at all, they have all this clutter around them that takes up energy and it's distracting. So you might not even realize it, but there's a subconscious, I point to the back of my head, there's a subconscious brain activity that's going on that is like sucking the life right out of you, slowing you down, making you less productive and less effective at whatever it is that you do. Okay. So if you were to delegate organization to this decluttering expert, you are going to basically be putting time back on your clock for a number of reasons. The same is true for hiring professionals in the financial space. Because when you have people who can look at your books and they can look at, your goals or whatever, they can look at something and in a few minutes, and I'm not saying that to degrade any of us, because it's because we have years of expertise that we can look at something and identify a problem quickly. That's what we're trained for. We're going to shorten your learning curve and we're going to allow you to do what you do best even better. Does that make sense?
Oh, yes.
Spot on.
Yeah, I
Spot
like
on,
that. I
Terry.
love that. And I'm like
Yeah.
with Morgan, she was talking about that extension. So Morgan, can you let the listeners or the watchers know if they file an extension, do they have to pay interest?
So yes, you will get charged interest if you have any balance due when you file an extension and you file the return by October 15th. If there is a balance owed, you're not only going to be charged interest for all that time, the months between when it was originally due and when you pay it, but you'll also get penalized for late payment of the tax.
Oh,
Mm-hmm.
that means a lot of money depending on how much you owe, correct?
Correct.
Okay,
Correct.
all right. So, because I think that's something they need to know. Getting an extension, oh, that sounds good, but it doesn't come without a price. There's a
Correct.
price to it. And so, Terry, can you explain what the difference is between a bookkeeper and an accountant?
Yes. So a bookkeeper is somebody who just basically they keep your records. So you would go to them, they would look at your bank statement, they'd look at your credit card statement, they would look at your mileage and all the different things, and they would plug all that information into your whatever tool you use. We'll call it QuickBooks because it's the most commonly used one. And then every month they would spit out reports. They would give you a profit and loss or a P&L. You would get a balance sheet, and you would probably get there's another one. I'm going blank. What's the third one, Morgan, that you usually get?
I usually only work from the balance sheet and the P&L.
Okay, so maybe I'm thinking of something else.
Yeah.
So you would get those, and then that gives you a really good
Oh,
picture of your business.
I'm sorry. The other things that they can give you is an accounts receivable aging report and an accounts payable report. So you can see money that's due you, how late it may be, bills that you owe, and when they're due. If you're behind on any of them, it'll show you aging as well.
Okay. Oh, I know what it was. I was thinking of was a trial balance.
Oh, yeah.
So those reports are very common, and it really helps you keep your business afloat to really have an understanding of your cash flow. And that's what a bookkeeper will do. The accountant takes all that information. They're the ones that are figuring out your taxes. So they
Mhm.
would process your 1040 at the end of the year.
Okay.
If you have a state document, they would do all of that. They would process your tax reports and your tax statement, tax documents, so that you could file your taxes. Throughout the year, your CPA, if that's who you're working with, the CPA,
Mhm.
you can request that you sit down, say quarterly or whatever period of time you think is good for you, and they would help keep you on track.
Mhm.
So
Okay.
rather than, letting the wheels fall off the bus, you would know within a few months if you need to make adjustments, rather than trying to correct a bigger problem at the end of the year, where your
Mhm.
bookkeeper will keep you on track month to month. And like Morgan said, keep you on track for, like, if you owe anybody money or anybody owes you money. I have one client who has this phobia of sending out bills. Don't ask me why, but she does not like to bill her clients. And then she wonders why she runs out of money.
Oh,
Now, if
Oh.
she had a bookkeeper, which is something I recommended to her, the bookkeeper would just do that. They would just
Mhm.
send out your statements. They would bill, do
Mhm.
your billing, get your money in,
Mhm.
and call it a
right,
day. I mean, unless you want to be a volunteer, it doesn't make any sense.
right.
That's right. And Terry, nowadays we even are, and Morgan, you can add on to this because you may have seen this before, but a lot of people now are getting nervous about trusting people with managing their money. Can you all let people know what they need to do to make sure the bookkeeper doesn't take their money and run off?
You bring up a really good point. And unfortunately, I've had to help people where an internal bookkeeper was committing fraud within the business and siphoning funds to their personal account from the business, which was tough. The big thing is checks and balances. That is the easiest way to prevent a problem from coming up. I've dealt with extremely smart people. I'm talking doctors and lawyers who had people within their organizations embezzle funds from them. And it's just because they're so busy and in their mind, they say, okay, well, I hired this person and I looked into their background and they have integrity, and it may be a cousin, it may be a brother, it may be an in-law who's doing that for you, but that's where we see a lot of the fraud and the embezzlement happen.
Mhm.
So the best way to protect yourself and your business in the future that you're building is to have checks and balances. Okay, you internal bookkeeper or external bookkeeper. I don't know if I'd let an external bookkeeper have oversight on my finances, my business bank account or checks or anything like that. I don't
No,
know.
I
You just
agree.
get to a point where you're like, no,
No, I think,
yeah,
they can obviously have a read only because they're doing your books,
right,
but you don't have to give
right.
them access where they could actually make withdrawals.
Right. And even within
Oh.
your organization, I would keep the bank signature card to you only.
Right. I would too.
And I would say, okay, internal bookkeeper, you need to give me every check. You need to show me the invoices. You need to show me what we're paying. Once a week, we're going to sit down and go through all of this. And I want you to have a stack of checks or tell me what bills need to be paid. And I'm the only one that has access to the bank account to make the payment. I think that that is the easiest way. It's so attractive to
Um,
assign work to other people, especially when you're so busy growing a business, but nobody should mess with your money to
Right.
that degree.
Right.
Somebody can help you manage it, which is what a bookkeeper does, and an accountant will meet with you quarterly to make sure you're in line with what your goals are. But when it comes to actually writing a check or authorizing a payment, keep it to you.
Right. And there that, with
oh.
checks and balances watching,
Hmm.
you can hire people and you can trust them, but you still have to keep your eye on them. The minute they don't think you're keeping your eye on them, if they have that little on-off switch isn't working right in their brain,
Oh.
that's when things can go wrong. But if they know
Yep.
you're watching and they know that you check to make, every single check that gets processed, every transaction, they know they can't mess with you.
Absolutely. And it's so
Oh,
sad to say, but the worst cases I've seen have been family-run
Oh yeah, I
businesses.
believe it. I
And
believe it.
it's usually like a sibling or a cousin gets jealous that one has a higher title than the other or gets paid a little more than the other. And they see it as a justification to kind of even the score.
Mm,
And it gets nasty and it's so sad. It really
it is.
is. So just take it from us. Don't get into business with relatives unless
right.
it's something where it's being passed down, and then have even checks and balances where you can make sure that somebody's not taking nefarious actions like that.
Right.
This is powerful. Like, I hope that they listen to this because, like you say, you get so busy. And then, they'll greet you with a smile, yes, no, and you think
Hmm.
they're so wonderful, but they could be robbing you absolutely blind. I
Yeah,
think this is it's valuable information that every business owner needs to know. Like, if it can happen to the rich and famous, it can happen to you if you're making 150, 200, three hundred
right,
thousand dollars a year and
Right.
you're not listening. But like
right.
Terry, when you said view only, if they have access to view only, can they get the checks and all of that if they can only view your bank?
They can't cut a check for themselves or anything if they can only view.
Mm-mm.
So what they would do is they can go into the bank account, they can see the transactions, but
Hmm.
they wouldn't be able to create a transaction.
Correct.
That needs to be on a billboard, y'all. Because there's so many people who are no, and then Morgan, because you work with it, it's like we didn't see it on the news, we didn't see it on a TV show or
I
on the
know.
internet. You worked firsthand with people who got robbed from their family members, and you think you can trust your family,
I
but if they
know.
get
I know.
angry and get vindictive,
Yeah.
they can
It's
really destroy your life.
I can't tell you. So, as I told you, I've been doing this business for over 25 years. This September,
Hmm.
it'll be 26 years that all I've done is handle tax debt. So I see extreme cases, right? And in the beginning of my career, I was battling with how to compartmentalize seeing this ugly side of people in business and what they do when it comes to money. And it there were times, I kid you not, when I was young and first getting into this, I would get off the phone with a client and I'd start crying because I had so much compassion for them and how invasive that situation was for
Mm,
them. I mean, it would rock you to your core.
sure.
And it was so hard to kind of develop a thick skin to circumstances that I've heard. And I've heard some tales over the
I can
years.
imagine.
I've threatened to write a book about it. just just to help business owners be aware that you can never let your guard down.
Right.
Mm.
Right.
You can't. And
Yeah.
leverage the best resources available around you. Like we were saying, a bookkeeper worth their weight in gold because they're going to make sure that your books are maintained. They're going to make sure that any expense you claim can be supported with proof so that if you get audited, they're like, no problem, I got you. Here's the copies of all those expenses for supplies that we put on your books. They're really going to look out for you, but it all comes down to you as the business owner, as the figurehead, making the right decisions to shore up all those resources around you so you become bulletproof.
Hmm.
Oh, I love that.
Yeah.
And so,
Trust
yeah,
but
you want to add
verify.
something else?
Hmm.
Okay, okay, say that again, Terry.
Trust but verify.
Correct.
And view only.
In view only. In JOB.
J-O-B.
I love that. And so, everyone, I'm going to put my friends on the spot. And so, since I'm putting them on the spot, I will go first. I
Okay.
want to leave you with three things. So, I'll go first and then Morgan and Terry. So, I'm going to give them time to think about it. But three takeaways that I want you to take from our conversation. Number one, do not mix your personal money with your business money.
Hmm.
Number two, you need to have a budgeting system in place. You need to have a budget for your finances, and then you need to have a budget for your business finances. And what I've learned is if you cannot manage your personal finances, it's going to be pretty hard for you to manage your business finances. And the third thing I would like to leave you with, please, if you are guilty of mixing your personal with your business, I highly recommend that within the next 30 days, you go and get yourself a business checking account, you go and get yourself a business credit card, and you separate your money, okay? Because if you don't, you're going to end up with nothing because you're hitting at nothing. And you know the old saying is, if you hit at something, you're going to hit it every time, which equals nothing. I hope the content that we brought to you is going to be helpful to you. And again, I'm going to send you an email. I'm going to have all of our contact information on there. And so now I'm going to turn it over to Terry so that she can leave you with 3 things from her conversation.
Thank you so much, Theresa. Thank you again for inviting me here.
Of course.
I'm going to leave you with JOB. I don't want you to be just over broke. I want you to thrive.
Yes.
So don't, and this is all mindset. I'm going to remind you again, success is 80% due to your mindset, and your mindset is how you think about things, and 20% due to your skill set. So make up your mind that you are going to be wildly successful, and then set a plan in place to do so. Get help. Invest in resources that can not only shorten your learning curve, but will put hours back on the clock for you so that you can do what you do best, whatever that might be. And then you can share that with the world, and then lather, rinse, repeat, and that's how you become very successful. And third, I really want you to think about the business that you're thinking about going in, and make sure that the service or product is something that people need and want. And here's a clue. Does it solve a problem? If it solves a problem, then it's needed. If it doesn't solve a problem, it might be a want, but not a need. And when you launch a business, if there's a need behind it, you will be successful. And I wish you all the best.
Thank you. All right,
Here,
Martha.
here.
Yes.
Here, here. Okay. My 3 things would be number 1, take the power position when it comes to finances with your business. And what I mean by that is a lot of people, when they think about balancing their checkbooks, right? People go, oh, gosh, it's like going to the principal's office or having bamboo shoots shoved under my fingernails. I don't enjoy it. Shift your perspective. Why are you going into business to begin with? Right?
Wow.
Keep that in mind and pull on that power to say, well, wait a minute. I am the king or queen of my domain, and my business is my domain. So I want to stay in control and rule the financial aspect of my business along with everything else that I'm ruling. So that's number 1, stay in the power position. The second point I would say is use your resources. I know, Terry, you touched on this, but be okay with not being everything for your business.
Wow.
Because you are excellent at working on an engine or running a restaurant or tiling a bathroom. You are an expert at that. And it's okay for you to pull in other experts to leverage what you're not an expert with. So bookkeeper, CPA, enrolled agent. Enrolled agents are similar to CPAs. The only thing CPAs can do that enrolled agents can't do is sign off on audits, internal audits. Fun fact for you. So you can look for enrolled agents as well to be great people to do tax returns and to meet with quarterly on where you are with your goals. The third thing that I would say, and we haven't even touched on this yet, is if you get a love note, as I call them, from the IRS or the state, do not give it more power over you. Don't be afraid to open it, read it, and deal with it. It's just something else that you need to deal with. 9 times out of 10, did you know this? That when audit notifications are sent to people, the reason why tax assessments happen is because people don't respond.
Wow.
A lot of times it's over something simple. Like I had a client who got an audit notification from the IRS, and it was because they claimed 3 dependents, but their one of their children's social security numbers, the numbers were transposed and didn't pass verification. So the IRS sent an audit notice saying, hey, we've gone through this and something isn't adding up right. Can you send us verification of your dependents and their social security numbers? And he did not do it. He was so
Geez.
afraid of that IRS notice that he put it at the back of his desk and ignored it and ended up with an additional tax assessment because he didn't address it. So just because you're getting something from the IRS or the state tax agencies, it's not a death sentence. It's not something that should keep you awake at night or something you should run from. Open it up, read it, and see what it is. If you need help, reach out to your CPA, your enrolled agent, me, Theresa, Terry, any of us can help you interpret it because we've seen enough in the financial world. But don't shy away from them because that's when problems start snowballing.
It does. And so we want to thank you so much for joining us. I know for a fact that this has brought valuable information to you. I hope that you will apply it to your business. And if you need to reach out to either one of us, you will have received this by email, but I will also have Terry. Let us know how you can find her. And Morgan, can you tell our listeners also how that they can find you once Terry has done it?
You bet.
Sure. Thank you, Theresa. The best way to find me is on my website, and that is Wealth Coach for Women. That's FOR.com. And you will find my contact information there. And there's also a button where if you wanted to set up a time to talk with me, I do offer a free 30-minute consult. So you're more than welcome to set that up.
Thank you. Okay, Morgan.
Awesome, Terry. You can look up Morgan Q. Anderson online. I'm all over social media. My company's website is Golden Lion Tax Solutions. And you can find my direct contact information there. Don't hesitate if you've got some type of tax situation weighing on your mind, reach out.
And you heard the name of her business, Golden Lion. That means if the IRS comes after you, she's gonna go after them like a raw lion.
You know, it's
No
funny.
pressure.
I do kind of think of it as throwing on a suit of armor and defending my clients before the
Uh-huh.
IRS and state. And having done it for as long as I have, I call it sick, call it twisted, but I love what I do because I get to help people when they're in this situation that scares the bejesus out of them. So,
That's
Yes,
great.
yes, yes,
yeah,
yes. Well,
I,
thank you both so much for joining me. Tara, did you need to add anything? Are you good?
No, I'm good. Thank you.
Okay. All righty.
oh,
Thank
Teresa,
you.
thank
Thank you.
you.
You're welcome. And we're going to do this again because this was valuable information. It even got my antennas turning. So
Heck
thank you both
yes.
again for joining me. And if you all need to find us, we provided you with that information. Again, thank you so much for joining us for this educational webinar. I just want to tell you again how much we appreciate you for joining us for this webinar. If you are an entrepreneur, or if you're thinking about becoming an entrepreneur, it's a lot of work. So I hope you've gained valuable content from our conversation. And then again, if you need to reach out to us, I have emailed you our contact information. And thanks again for joining us. And I hope that this has been valuable for you. And we'll see you again later. Thanks.